Kenya and China are not merely trade partners. We are co-architects of a new world order, one that is fair, inclusive, and sustainable.
Welcome back. You're watching the News Gang. And yes, the president is in China. He was there in October 2023 and again in April 2024, of course, for talks, infrastructure, financing, and trade agreements. Kuna watu wanalalamika wanasema wameenda kukopa tena, but I mean, the conversations from there the past 2 days have been a lot of deals signed. I think day one was about 107 billion shillings. 7 companies signed a deal, including one that is supposed to cultivate aloe vera in Baringo. There's one that's supposed to have a chicken farm in Kajiado worth about 3.8 billion. There's a tourism one, Huashian Hotel Management is supposed to lease Hilton Intercontinental Hotels. Then we have China Wuyi, it's warehousing in Kikambala and Kilifi, worth about 19.3 billion. So we have all this going on, Gituku and Bonyo. There are a lot of deals being signed. I mean, I don't want to sound naive, but let me ask with you, Bonyo, do we need all of them?
Maybe you should rephrase it and ask, are they good deals?
Yeah, they're good deals.
I think that is the first thing that we really need to understand. And knowing that this is a good deal simply is in the text of whatever deal that has been signed. As it is, we are just getting the top lines. And the tragedy with the top lines is it's a lot of celebrations. We have signed with this investor. We have signed this with the government. Until, remember, as journalists, we've been looking for the first contract that was signed to build the SGR.
SGR, yes.
Almost a decade later. It's yet to be put in the public domain. What is there are the doctored versions to fit a certain narrative. So it would be important that as we move forward, the government make some of these documents public. 2 would be to ask, is it sustainable? If you are going to do the Malaba SGR extension at a cost of about 600 billion, as you say, it's a deal that has been signed, and simultaneously you're also going to do the Rironi Mau Summit one, you want to ask yourself, as a country, can we bear that burden at this particular time in history? So China has always been that financial darling to a number of developing countries, for the simple reason that when you go there to look for deals, the traditional strings attached that comes from financing from the West are missing. And therefore, most African countries tend to go knee-deep into trying to secure funding from China so that they do some of these projects. However, the pain is in the repayment. And that is why I say we really need to get clarity from the National Treasury, once this has been done, that these are the kind of loans that we signed. And these are the loans that the Kenyan taxpayer has a responsibility. Because some of those things that have been signed with the private sector players. And again, that also calls for the question. Is the environment not conducive enough for even local investors to take up some of those things? Because one of the conversations that is big, and it was rightfully in our intro, is about that chicken farm in Kajiado, that an investor comes in and puts about tons of money to put up a chicken farm that is going to generate 500 jobs. You want to ask, 1, what are the quality of those jobs? And 2, is this not something that local investors can do? So just looking at the rationale of some of these deals that we are signing should also be one of the factors for reflection. Overall, I want to say that China has always been embracing African or a number of developing countries with open arms because of the Belt and Road Initiative, where they certainly want to put in their influence, but not in a manner like the US or the UK or Germany would want to do. They do it through that financial chain, that you owe us this money and we will continue to be part and parcel of your lives as long as we want. Anytime you need an extension of this loan, you'll always get it.
Yeah.
But then again, there are certain things that we draw from you without interfering in your state of affairs.
And some would say that they've been using soft power. I think their entry into Africa was almost 25 years ago, I think the year 2000.
Yes.
And since then, billions of dollars have been given to various African countries. Yes. And they even use their culture, like the Confucius Institutes in the universities. So they're using all this. We even have those small Chinese centers, even here in Nairobi and other parts, where you see them, wako hapo, you know, and you don't feel threatened by them because they're there, they're doing their businesses. Hawakuji kuwalazimisha.
Look at schools doing Mandarin today.
Yes, Mandarin.
Quite a number.
Quite a number.
Yes.
And but you mentioned something, Bonyo, that I think is very interesting. You talk about how the devil is in the details.
Sure.
That clearly we are not being told. But then now when you see deals that can actually be done or by Kenyans themselves, you ask yourself, why can't we give opportunity for the chicken farm to a Kenyan investor to do it in Kajiado, whatever parts of the country there we are in, because we do have people wenye wanafanya vitu kama hizo. So maybe we should jiangalia sisi kwanza, what benefits us, what benefits our investors here before going to look for those ones who are abroad.
I think the question that we must all of us ask, why is it that Kenya is a very attractive market for Chinese investors, but it's not so for Kenyan investors?
Yeah.
Is it that we don't have the capital? Is it that we don't have the capacity in terms of the know-how, the skills, the ability to see projects through? Or what exactly is the question here? Because if you have to look at, just looking at some of these deals, China Wuyi is going to come and invest in I think it's the Kikambala Kilifi project that is building a warehouse worth 19.3 billion shillings on a parcel of land of 191 acres. Yeah. What exactly is this about? When you talk about the Kajiado project of worth 3.8 billion shillings for part of the deal is about 10,000 birds, breeding birds, you call them. Yeah. Why is it that it is actually okay for such a firm to come from China and invest all that money here? Our banks have been recording profits in the billions. Sure. If you look at how we finance the national budget, the government has a deficit, in the coming financial year has a deficit of over 800 billion shillings. Part of that, nearly 2/3, is going to be financed through domestic borrowing of more than 600 billion shillings. This borrowing, this money is going to come from financial institutions, from individuals, from, financial to mean both banks and insurance firms. It is also going to come from pension funds. So we have the money, we have the capital actually. It's only that we have not properly come up with ways, structured ways of how people can invest. We see different counties coming up with their investment conferences. Yes. I think Machakos County may have been the first one for devolution once Governor Mutua came to the office in 2013. And there has been several. Yeah. I think Homa Bay had one not long ago. So these investment conferences, what do they achieve? And are we just looking for foreign investors, or are we also encouraging the local investors? Because you may not have all the money, but you can have access to credit and put the ideas that we have into this. Because honestly, I'm not disputing that we actually need 10,000 breeding birds. Yeah. We probably do need that because we still haven't satisfied the market for eggs and also for bird meat in the country. But are we able to enrich our community, our society, our country, so to speak? Because as we keep talking about developing the manufacturing agenda, what are we doing about it? Not long ago, we've seen one of the companies, I think it's Devki, starting out at some clinker processing plants across the country, one in West Pokot, one at the coast. I think it was it in Kilifi? Yeah. So what is it that is working for such a farm that is not working for other farms in Kenya or for other Kenyans that would be interested in investing in that? And I appreciate the fact that you're saying that 500 jobs will be created by starting a chicken farm. Yeah. It is okay because 500 people are going to get jobs. Yeah. But what can you do? Because these are not new skills. Raising chicken is something that is known, especially at the basic level, at the, what do you call it? There was what, subsistence level.
Yes.
But there are some that have started doing it at the commercial level. Not many birds, maybe 100, 500, 1,000, getting to a few thousands. There are certain tricks, there are certain skills that can actually be shared if this is where we want to go and look for solutions. So I think not having the details of the deal is unfortunate for Kenya. We hope that soon that we're going to get those details, because we need to read. When you're saying that you're investing in Intercontinental Hotel and Hotel Hilton, or is it Hilton Hotel?
Hilton Hotel.
Yeah. What is the deal? Because once upon a time, these were hotels that were actually functional. I remember attending a lot of events at both facilities. They no longer function today. When you say that it's a deal worth about 3 billion, another one more than 2 billion shillings, what exactly are they offering themselves, and what are you offering them? Because the land is in Kenya, the hotel, the building is already built, the facilities are there, it is the service that is not running. So when you're saying that more than 2 billion shillings will be invested at Hilton Hotel or at the Hotel Intercontinental, what is the deal?
Yeah.
What are we getting out of it?
Yeah.
What is Kenya getting out of it? And if you had to look at even the ownership of that hotel, how much is owned by the government of Kenya, and in this case by the public, because Kenyans need to know.
There was a post that was put up by a gentleman called Doan Chow, who's the president of Vietnam Gas. And he says he met with Prime Cabinet Secretary Musalia Mudavadi and President William Ruto in Nairobi, and they spoke about a lot of things. He said something very interesting. He said Kenya's real problem is not a lack of money or talent. It's the absence of long-term vision and the dominance of short-term gains. Leaders talk big, but systems don't move. They wait for outsiders to bring business rather than build an environment for it. Nasema sisi wenyewe ndo shida.
Exactly, because the business of government is to create an enabling environment for investors. And a good government would first of all look inwards and ask, what are we doing for our own investors so that they're able to create genuine jobs, so that they're able to create and put something in this economy first before we look outward.
Yeah.
And some has rightfully mentioned that if it is lack of access to capital, what exactly are we doing to ensure that that capital is available? If it is about regulatory issues, do we have laws that will enable local investors to go first before we invite foreigners? Well, you can argue that the market is so huge and everybody has an opportunity to go at it, but are we also celebrating local investors and when they sign some of these deals in a similar manner that we do when foreign investors come in? Because these are the conversations that would inspire more people to try and put their money here. We have had situations where we've reported about companies relocating elsewhere in the last 10 or so years. And what is it that they're saying? They're saying that the conditions of doing business in Kenya are becoming unbearable. One key factor they say is corruption.
Yeah.
That the amount of kickbacks that is requested from you as an investor is equivalent to what you could have put in to start off your operations. And they say this is unsustainable. So can we get to the point that we want to address these issues and discuss and talk about them such that whoever has the responsibility of ensuring that the environment is a level playing field for both local and foreign investors, then let's do that. Because otherwise, just like the president of Vietnam Gas says, our leaders are very good at reading speeches that make big promises. Yeah. But when it comes to the doing bit, then we are not good at it at all.
Ground mambo si mzuri. Because you talk about the environment for doing businesses. And I remember the COVID-19 pandemic notwithstanding, we've had companies closing down in Kenya. I think in the last year, we had thousands of people losing their jobs because companies had to shut down, unable to continue operating in Kenya. We are having to send our young people or our Kenyans to other countries to work, exporting labor, and then we have all these issues that come, mtu ameteswa, watu wameuawa, they're being treated badly. We had the Myanmar issue, remember, where people were recruited kupelekwa kule kufanya kazi and they end up doing fraud. We had the Finland saga where we were taking people abroad to study, pesa zikakulwa. So we already have all these problems because we don't have nafasi za kazi hapa nchini. And here we are, what you talked about, that we should give opportunities to Kenyans themselves. I'm not saying it's a bad thing, because there's one of these projects that is supposed to have 7,000 jobs. It's a textile solar plant in Murang'a and Athi River, which is a good thing.
It's huge, yes.
But then, should we be doing more for ourselves, looking at what our priorities are really, that we create those environments here, make sure that the businesses that are here are actually thriving so they can hire more people instead of having to do what we are doing.
So if you were to start a factory for a textile, of course we have the APZ, and we know how it does with that in terms of exports. So what are we doing with the market dynamics? Because how much is it to buy a new cloth or a new piece of cloth in the country? And you find, I think there's a report that was done recently talking about that Kenya is among the leading nations when it comes to consumption of mitumba clothes, second-hand clothes, if you like. And there's a reason why that culture is real. If you had to trace it back to how we got to where we are, how the likes of Kikomi, Kisumu cotton mills were closed down after a lot of frustration because of the government policies that were changing. From one point, it's a private company, then it's a public company, then it's a private, then it's public, then it's private, and then it goes down. So all those challenges that happened that have led to the historical reality we live today, that many Kenyans cannot afford to buy new clothes. And when you're buying new clothes, you are looking at the quality and you're like, no, I don't want this. I'd rather get a second hand that is way better than a new one. But we have to address this question. Like, seriously, it's not just about campaign manifestos to win elections. If really we want to turn the contribution of manufacturing to a double-digit percentage when it comes to contribution to the GDP, that is gross domestic product, you have to be serious in action. Because when you say, again, let me reference the example of birds. When you say that you're going to grow 10,000 breeding birds, where are they coming from? Are they local? Are they Chinese? Are we just creating a market for foreign nations, forgetting that we also need to build our own capacity and to build our own original birds, if they exist anymore, because there has been so much research and studies done to improve even the breeds. But at the same time, it's also important to reflect on what are the difficulties that new businesses and manufacturers have to deal with on a daily basis as they start out. And if you have to look at young people, especially who are complaining about the lack of jobs, thank God at least a few will be created because of these deals. We are talking about people who try out to start out startups. That doesn't sound right, but it's right actually. But then, if you start out a business, unless you're hosting it in your house, in your whatever house that you live in, then you have to deal with the question of rent. Recently, there's a report that said that one of the greatest hindrances to businesses thriving in the country is about the cost of rent, and they're asking that the government needs to intervene. You're talking about taxes, and not just the taxes that you find from the Kenya Revenue Authority, there are also levies that before you start out, there's so many things that you have to pay for. License for this, single permit that you have to pay as you're installing the fittings for your small space that you're starting out a business. There are taxes that you're having to pay on top of whatever you're buying. There's a question of value-added tax, and sometimes because you're starting out, you don't even have the space of claiming that VAT itself as input VAT. The regulatory framework that you're talking about, I mean, how often do we change how businesses are treated when it comes to taxes or even the other levies that come to it? How is the access to credit? Of course, credit has been one of the biggest challenges in the country, and thank God at least now you see that the interest rates have been falling. But then
on paper.
At least from the CBK rate. But when you go to the bank and they slap you with the risk assessment, and then you realize that actually you cannot pay for this, the payment period and what you have to deal with, again, the labor laws and the taxes accompanying laborers. So today, a new employee, if you put them on your pay on the payroll, they have to pay so many taxes. Apart from the pay-as-you-earn, they also have to pay housing levy. They have to pay, what do you call it, the shift deduction itself. So many deductions that you have to accompany that. And that has led to even firms, like you said, cutting down on the size of their payrolls. So all these are challenges that Kenyan farms are facing. One wonders, when you're signing these deals with the Chinese farms, what are the concessions here?
Yeah.
What are the incentives?
Just to be a give and take.
Are they coming in here to start paying all these taxes? And I'll be curious, because they'll obviously have an importation of machinery.
Yeah.
What are the deals?
Yeah.
Because everything you import, including this pen, there has to be tax
on it.
applying on it. So this machinery, what is the concession? Is that concession to the disadvantage of Kenyan farms that may want to be doing some of these things? So I think it's a bigger conversation that, yes, we welcome the deals, we welcome the promise of bigger jobs, growing the economy so that manufacturing can contribute a double digit. I think latest I checked, it was about 7%.
7%, yes.
It was actually going down. We need to know these details and how they work if you're to compare them to what Kenyan farms have to go through.
The president said in China that Wakenya msemagi kitu mzuri. You don't say...
No, but you see, Jamila, we know what needs to be done.
Yeah.
If you speak to manufacturers through their umbrella body, Kenya Association of Manufacturers, if you speak to the Kenya Private Sector Alliance, they tell you that they have these conversations with government almost every other month.
Yeah.
What they're asking for is consistency. Consistency in policy, consistency in tax regimes, so that the business environment can be predictable. Then they're able to do all these big things that they're expected to do. But in the absence of that, then as an investor, you are technically doing business and hoping that things stay as they are. And once in a while, things change in a way that you really did not expect, and that hits you and gives you a setback. It is not wrong to go out there and ask investors to come to Kenya. What we really need to do is, as we attract foreign investors, let us also look at the local investors and give them a level playing field. Because manufacturers will tell you, if you move stuff from Kiambu County to Machakos County, a distance of about 40 kilometers, you'll pay taxes in Kiambu, you'll pay them in Nairobi, you'll pay them in Machakos. And for a business person, that's an extra cost that goes now to the ultimate consumer. So some of these things requires a lot of conversation. They requires just being honest and find out what is our ultimate goal. The long-term view that that gentleman was talking about, as opposed to looking that as a country, how much are we raising in our local revenues? As a national government, how much are we raising in taxes? Create that environment that will offer level playing field for every other investor. Then the big monies that we see people putting into treasury bills and bonds will actually go into investments, into manufacturing, into agriculture, into transport that we are signing in China.
I like what you said about predictable and no surprises.
Exactly.
Yeah, let's just know what to expect. And I think on that note, we will end our discussion tonight. It's time for our final words. Because you've spewed wisdom now,